The stock market continues to plunge. Consumer confidence just took another deep dive, a deep dip. And there's a lot more drama coming out, a lot of job owning going back and forth between the current administration and the bankers, what we call the Fed. And it's only going to get crazier, folks. But let's go ahead and get into it today. The markets and the investment community, they're not liking what's happening here. They're not liking the bickering that's going on or the criticism going back and forth between, in this case, not really back and forth. It's kind of one-sided. The Dow dropped 1,000 points on Monday, April 21st, as the administration renewed its criticism of the Fed chair, Jerome Powell. There was even some name calling in there, and the investment community did not like it. It's viewed as uncertainty. It's viewed as volatility. Well, it's causing volatility, but it's viewed as disruptions in the normal way things are supposed to happen. Everything's supposed to be cohesive, and everyone's supposed to agree and get along. In this case, it's just the opposite, a lot of headbutting going on. And here's just one of the things that just happened. Stock slump because of the threat to fire Jerome Powell. Well, Powell came out, was it 6 months ago in a press conference, and said, I can't be fired. And I said to you, all of you here, I said, well, who really runs things? Or if you can't fire this guy, then who really is calling the shots? Who runs it? And I'm not saying he shouldn't be fired. I'm just saying that things aren't always the way they are presented to be, right? It's the banks that really run the economy. The president, he can sit back and try to take credit for this and that, but at the bottom line is it's the money, it's the interest rates, and in this case, investors are spooked just because of the thought or just because of the disruption and the, what would you call these, threats? Yeah, threats to fire somebody. Well, we'll find out if he could be fired or not. And Trump basically came out and called him a loser. That's a quote, loser. Powell waiting too long to cut rates. Well, I think asking to cut rates or wanting to cut rates is a loser thing to do, right? Lower rates, easy money. That's what got us into this mess that we're in today. The cost of living so high that people are stressed out. By the way, consumer confidence just plunged again. How bad is it now? Consumer sentiment plummets to second lowest level on records, going all the way back to 1952, folks. We're over a 50-year low now in consumer sentiment. It just keeps dropping and dropping. I guess they didn't keep records before 1952, but if you went back to the Great Depression, it'd probably be a little bit worse, I would imagine here. I would almost bet money on that. But it says here records only go back to 1952, but it's the second lowest since then. And just since December, when things were pretty optimistic, people were feeling pretty optimistic because all the promises that were made, we're going to bring down the cost of living on day one, things are going to get easier. Here we are 3 months into it. People are realizing they've been had, I guess. Sentiment has now lost more than 30% just since December amid worries about trade war developments that have escalated all over the course of the year. And it's going to add more cost pain on top of already high prices. And with over 100% tariffs on China, folks, the country that we get a lot of things from, that's going to be pretty damaging to the U.S. consumer. Now, just to be clear, not all of the increase, not all of this 100% is going to be absorbed by the consumer. You're not going to see prices double. You may see it double for some things. Look at the baby stroller situation. We just talked about that. Prices will go up big time for those. But overall, you won't see prices double when you look at the big picture because not all of the costs are absorbed by the consumer, right? It's spread across the chain, so to speak, the supply chain. So you have some absorbed by the buyers, some absorbed by the shippers, and not everything's going to get passed along to the consumer. But the consumer, mark my words, the consumer will see higher prices. We're not going to see deflation. Overall, now you may point to one or two things. Eggs came down from $9 to $8. I'm not talking about that. I'm talking about overall, you're not going to see prices come down. The cost of living is not going to come down. And I'm not talking about a slowdown in inflation. A slowdown in inflation, the word inflation means prices are still going up. The bubble's still getting bigger. It's inflating, right? A slowdown in the inflation just means it's inflating slower. We don't need that. We need deflation. We need the bubble to burst. We need the bubble to pop, just like we did in 2008 with the housing market. Prices came down for a few years before they came in with what? lower interest rates, easy money, backing of the banks, propping up the banks, right? Basically saving the banks, a lifetime life raft for the banks, if you want to call it that. Even back then, that's what, 17 years ago now. Even back then, they were promising that the banks would not be allowed to go under. So even back then, I guess we should have realized that things were going to get this out of hand, that the cost of living was going to get this crazy, that homes would be so expensive, that unaffordability is all-time lows right now, even worse than before the housing bubble went bust in 2008-9. But nobody is actually talking about prices coming down. I think they're afraid to have prices come down because when you have lower home prices, the tax base gets cut. And of course, they don't want that. We just had another, I believe, record of people paying their property taxes here. U.S. property tax bill jumped again in 2024 as affordability squeezed buyers. Higher home values and local costs contribute to a 2.7% increase in the average tax bill. That's just one of the many reasons why they don't want the cost of homes to come down. They want to keep the bubble inflated. They would rather have inflation and people struggling to get by versus deflation, even though deflation technically in the end would be better. Now, at the beginning, any sort of price correction or deflation or market crash, including the housing market, anytime the cost of living comes down, it's usually on the back of something very, very bad happening economically and financially. So at first, it's a very, very bad thing. But overall, I think we can all agree that a lower cost of living is better. But when prices crash, you see a lot of now investments get changed around, a lot of jobs get lost, and others are created, but jobs are lost at the very beginning. So it's a very scary thing to allow prices to come down. That's why the name of the game that we see here is just inflate, propping up of the markets, sending stimulus checks out if needed, canceling evictions, canceling foreclosures like we saw 5 years ago now in 2020. It ended actually in 2023, I believe, at the end. For many years, they had this moratorium going on where people couldn't get their homes taken from them, which you could argue is a good thing. But if you're someone waiting on the sidelines for home prices to come down, it was actually a bad thing, right? So it depends on what side of the fence you're on here, whether you look at any of this information as good or bad. All right, so it's all over the news, folks, all over the financial news. Even mainstream news is putting it out here. The Dow slides as the investors worry about the criticisms over the Fed chair and the interest rate decisions. Very interesting here. Let's take a look at some charts now of the stock market. And I told you months back that I'm hands off the stock market right now. And let's go ahead and start off here with the Dow Jones, people. We dipped under 38,000 intraday. We were at 37,000. The low was about 37,848 today, folks. And that is a huge drop there. We saw the peak late 2024. We were over 45,000. Almost hit that again in January. So down from 45,000 to under 38,000 today, folks, on the Dow Jones. That is a bear market territory, folks. That is correction territory. S&P 500, similar story. The peak on this one was actually February, 6,144. We're down to 5,158 intraday. Did we get below 5,000? Almost. We were at 5,103, and it's not looking good for people that bought, especially if you bought at the top back just a few months ago. People should have been realizing that there was some severe volatility basically coming up to bat here even before November. Just the thought of the new administration coming in and making all these changes, right? And again, these changes could ultimately end up doing good, but how many years down the road is that going to be? Is it going to be 2, 3, 4 years? And by the time they start doing good, we're going to have someone else coming in and changing everything up again every 4 years, kind of flip the table over every 4 years. That's just crazy. It's insane to think that people were even optimistic to begin with. I told you back then, I said, what are people optimistic about? To change things and to have manufacturing come back, just one example, it's going to take years. It's going to take years. And then by the time it does start happening, if it starts happening, it's over. It's time to go to a new administration that could just, again, turn everything 180-degree turn and go the opposite direction. You know what I mean? All right, what we actually need is long-term structural change, not just, oh, this administration is going to do this for 4 years. Next administration is going to do that for 4 years. Long-term structural change, right? We've seen things around for decades that seem to never go away. We've got, of course, the central banking system, the system of fiat money ever since 1971. You don't have to have any money in the bank to be able to loan it out. You can just click a button, create trillions of dollars out of thin air, right? These things have been around for decades. We need something massive, such as those things I just mentioned, to change. The way money is even brought into existence needs to change before this whole picture starts to also change or starts to evolve. But in the meantime, hey, we can make money off of this. People that shorted the market or went on a put option many months ago are sitting pretty good. We called several stocks here. We had massive wins on, I think, the past 5 or 6 trades that we've done here. So we've done really, really well. If you know what's happening, if you know what to expect, you know where to put your money. People that, I don't want to say followed me, but people that did the same strategy that I had, which was putting money in 401k in this case in a fixed asset or fixed account before we saw this coming, you didn't lose anything in the stock market, right? But I think I read that over 80% of the people, close to 90% of the people, lost money in their 401k because of this crash. And technically, it's not really a crash yet. I shouldn't use that word. It's bear market territory because it's over a 10% correction, but it's certainly not a crash by any stretch of the imagination. And take a look at this. Something else just got worse. Money worries. Just 13% of Americans feel confident about their finances. That's out of study finds. So do we see that something wrong here yet, folks? 13% of people, only 13% of Americans feel confident about their finances. It goes right along with the top 10% have most of the wealth. In this case, 13%. Okay, so expand the top 10% out a few percentage points more. Top 13%, maybe these are the people that feel very good about their finances. Or it could be somebody not in the top 10% that just doesn't have that many bills. Maybe they got a house handed to them or a trust fund or something, and they don't have that much overhead. They don't have a family. Everything's paid off. While 84% believe financial planning is more important than ever during economic uncertainty, out of study finds here, 74% manage their own finances, but only half have strong confidence in their financial decision-making abilities. The top financial goals for Americans in 2025 include saving money, that's 53%, reducing debt, and establishing an emergency fund, 27% of them. All right, now let's jump over and see what gold is doing, folks. 3,454 as I'm recording this. Look what just happened here recently. Just since the 6th of April, and I'm recording this on the 21st, so in about 2 weeks, gold went from 2,960 to 3,430, folks. Look at this. That's nearly parabolic, people. Exponential growth. Is it going to continue? I'm still waiting for a pullback. I sold off some more of my gold miner stocks. I think I talked about that in my last report. Just 10% though, just a very small amount just to take a little gains, because if we do see a correction, it's always nice to take some gains, right? But I don't think we're going to see a correction that long if we do, because the fear is out there, folks. People are questioning this entire structure right now. This entire financial structure is under question, and people are scared and uncertain. Consumer confidence plunged again. Consumer sentiment, in this case, to the second lowest since 1953. That should tell you something right there. And things are about ready to get a lot worse. 60,000 Americans set to lose their rental assistance and risk eviction unless Congress acts. 60,000 just all at once because of the cuts that are happening right now. So what's the concern here? Is it the fact that we're cutting these programs? Or isn't the bigger concern that so many people are reliant on these programs in the first place? It's almost like people expected just the money just to be printed to infinity, just to fund all these things forever. Not expecting any adverse consequences, not expecting for this to cause inflation, which obviously it is. It just took a while, and now we're here and it's not going away. And now people are crying because the programs are going away. Well, yeah, there's going to be a lot of pain. There's going to be a huge surge in homelessness here. And will these 60,000 people just be kicked out on the street here in a very short amount of time? Well, let's take a look. And it goes on here, 60,000 Americans to lose their rental assistance and risk eviction. Moments after Miss Espinal walked into her new apartment in Brooklyn, she prayed. Ensuing nights, she would awaken and touch the walls for reassurance. And let's look at it here. How bad would it be? It would be among the largest one-time loss of rental assistance in the U.S. And the ensuing evictions could churn these people after several years of rebuilding their lives back onto the street or back into abusive relationships. So basically, it was a program that helped people escape abusive relationships and escape homelessness. Well, it could be from the street to a roof over your head, now back onto the street, unfortunately. All right, now because there's a lot of people losing money in their 401k right now, I wanted to touch on this article out of the Financial Times. It goes, as markets plunge and panic rises, financial experts reveal what you should absolutely do with your 401k. And basically, I'll sum it up for you. I read the article. I kind of knew what they were going to talk about. They're saying don't panic and just wait. Because every time you've done that in the past, all you had to do was wait and the markets recovered and they went on to new all-time highs. The fear is that it's different this time, that it's never going to recover. That's always the fear, that seeds of doubt that get planted into people once they see their retirement accounts take a big plunge. There's those seeds of doubt. What if the markets never recover? I better sell now. What if it goes lower? I better sell now. And I could see that. I could see how people would panic and say, let me just take my money out while the getting's good, or while I can, because it might drop more. Folks, the market always comes back. Maybe 2 months, maybe 2 years. It always comes back. So that's why I've always encouraged here on this channel, and I've said this here thousands of times. I said I'm never all in, because if you're all in and then the market drops, a few things. One is you don't have any money to invest when asset prices plunge and now it's a good time to buy, and you have no money because you were all in, right? But the people that are all in, they were FOMO. They were afraid of missing out on bigger gains, right? So the more you have invested, the bigger your gain's going to be when the market goes up. And this is true for any market, the housing market, the stock market, you name it, any investment. But then when it drops, you have nothing to invest at a lower price, right? So that doesn't feel good, folks. So I've always said here, just what they're saying in this article, Economic Times. Don't panic. Wait for the market to recover. In this case, we were out of the markets. Or if you've been kind of on the side of my thoughts, or if you've been thinking like myself, you've been out of the markets for a while because you knew this was going to happen. And now is a beautiful time to invest. I'm not going in very heavy right now because I think we have more downside, because there's a lot more to happen. And we're only, not even 4 full months into the year yet. So not even 1/3 of the way through 2025. And we've got some major fireworks, volatility, and craziness ahead of us here this year, folks. Something else here, housing. Rental prices keep rising amid inflation and low inventory. Asking rents were up another 3.5% in March compared to the same time last year. Now, for a while, we started seeing some dips in rents in certain areas. Overall, prices still up year over year, folks. I mean, people thought that when certain people were exiting the country and leaving the country, that rents were going to plunge. And it hasn't happened, folks. The big money that owns most of the rentals and most of the properties, they're not just going to lower rent. I think they would rather have a property sit vacant before they would drop the rent in some cases. And when you're a multi-billion-dollar corporation, you're not desperate to rent the place out. You can let it sit empty. Now, I don't think they're doing that yet, but I'm saying before they did or would drop prices, I'm thinking they would let it sit vacant. But we'll see how it goes out. I mean, we still have a long ways to go as far as the number of people, the population change, and what's going to be happening with the people that no longer that they're saying are no longer going to be allowed to stay here, right? So we're going to see how all this plays out. I mean, again, we're only a few months into this administration. We got a long ways to go, and a lot more craziness is going to pop out, believe me. All right, what else is happening, folks, on the inflation front? Well, and for inflation front, China-owned supertankers face $5.2 million in fees per U.S. call, folks. So it's going to get crazy. I think we're going to be entertained. All right? Don't be scared. Be entertained. I hope you're in a good position. I hope you've been watching this and you are in a great position because you expected what we're seeing right now to happen, right? Please let me know down in the comments about all this. The second lowest level in consumer sentiment since 1953. The words going around talking about firing the Fed guy and all this stuff. Is it going to happen? Or does the Fed run the show? I mean, let me know what you think about all this down in the comments. Please hit that subscribe button. Help keep this channel alive. Everybody, thanks for being here. As always, keep stacking. Bye for now. Peace.